Now here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. Well, coming up, Mick McCormack, the CEO of APA Group, speaks out about the Treasurer knocking back his company's $13 billion buyout offer from Hong Kong's CK Infrastructure Group. Where to now for Lynas Corp, with the company shutting down its Malaysian processing plant over the month of December. My one-on-one interview with the CEO, Amanda Lacaze, in the studio too. And golly, Solomon Lew, Premier Investments Chairman, dedicating his company's AGM to renewing his attacks on Myer. The drama continues. We'll get the latest with the Australian's Eli Greenblatt. Well, before all that, very big show, a snapshot on the global macroeconomy, where there have been a few developments. Most important, Wall Street has been waiting on just what Fed Chair Jerome Powell would say about interest rates, wasn't it? And he didn't disappoint. He's now moved from a position where he'd said rates were a long way from neutral to now just below neutral, i.e. they sit pretty well with the economy. Listen to this.
We also know that the economic effects of our gradual rate increases are uncertain and may take a year or more to be fully realized. While FOMC participants' projections are based on our best assessments of the outlook, there is no preset policy path. We will be paying very close attention to what incoming economic and financial data are telling us. As always, our decisions on monetary policy will be designed to keep the economy on track in light of the changing outlook for jobs and inflation.
Yes, Joy, no preset policy path. Wall Street surged on that news, the market taking it as a sign that there might be fewer rate rises next year than previously thought, which has to be a good thing for equities, right? Well, across the Atlantic, the Governor of the Bank of England, Mark Carney, was doing his best to stir the possum over a no deal on Brexit and push the British Parliament to get behind Theresa May's best deal possible with the EU. Remember, that's the one that Donald Trump this week called a great deal for the EU, but a deal where there was little opportunity for Britain to trade with countries outside Europe like the US, which is kind of the point of Brexit. Mark Carney published a report analysing the impact of a no deal, which claimed that it would be the worst financial shock since the Second World War. Well, this is the Governor of the Bank of England, mind, who has infuriated Brexiteers from the get-go. Overnight, he was accused of project hysteria and of being politically biased, the most un-governor-like or worst. Here's one of the chief Brexiteers, Jacob Rees-Mogg.
He's talking about racking interest rates up to 5% because he's cross about Brexit. I'm afraid his reputation has fallen even faster than his economic forecasts predict.
And finally, we should add that the IMF, which threw its two bobs worth in this afternoon, it's already downgraded its forecast on the global economy for this year and next year to 3.7% from a mid-year prediction of 3.9%. Well, another leader who, by the way, doesn't like Brexit at all, IMF chief Christine Lagarde, blogged that the global economy faces a critical juncture. That's a message she's taking to the G20 summit this weekend in Buenos Aires. She'll warn that Donald Trump's threat to put up tariffs on auto imports might wipe 0.75% off global growth. Well, the Don has got to do something, hasn't he? Or be seen to do something about those GM plant closures this week, hasn't he? I would say that it's remarkable how all these world leaders seem to be taking things very personally. Right, well, it's been a high-rolling year for the best drummer on the top floor, Mick McCormack, the CEO of gas pipeline giant APA Group, who's spent the last 18 years building the business into something so successful that it's well in the crosshairs of the regulator. Mick McCormack is going to be running it for a bit longer, it turns out. That's because the $13 billion takeover offer from the Hong Kong-based CKI Group has been rejected by the Treasurer, Josh Frydenberg, in the national interest. So where does that leave things now? Are there other offers that might emerge for the board to consider? And if not, and it's back to business as usual, what next for the APA growth strategy? Well, Mick McCormack joins me in the studio. Mick, it's great to talk to you. Now, I've read a few reports on all this. Were you really sad that the deal didn't get through?
Oh, I'm certainly sad in the sense of all the work that the board had put in.
Yeah. You could have walked off into the sunset with your package and everything.
I could have, but I'm not going to, am I?
No.
I've had to turn back up at work the day after the Treasurer killed the deal, so
yes.
Here we are.
Yeah. Did you expect it to be anything other than this, though?
Well, when the board approved the deal or agreed to enter into it, it was certainly considered compelling. And I will make the point that the politics, federally at least, between then and now are vastly different. So,
but wasn't it always going to be slightly sensitive in terms of national interest?
It was, but the board had good advice on that, and the view we formed was that both from an ACCC perspective, it ought to be approved, indeed it was, and then from an FIRB perspective, it ought to be approved, and you know there is some conjecture about what actually happened inside FIRB.
Yeah, we don't quite know what went on, do we?
But as I say, the change in the political sphere certainly impacted that on that, I think. But at
do
the
you
end,
think it actually shifted over that time, do you?
Oh, personal view is absolutely, there's no question about that, with the leadership change. And I think I certainly went from a reasonable degree of confidence to when the Treasurer announced the preliminary view, that's when my shoulders sank a little, and I thought, this is a softening up move for an O.
So, like, it never hit the offer price, did it, the share price? So, what does that say? Because I read also that retail investors probably weren't that happy about a deal like that going through because they like holding the stock. Yeah,
well, two answers to the question. Firstly, the view is the trading price didn't hit the $11, got close to it. That simply reflected the fact that there was some doubt in the market around getting those approvals.
Right.
So it sort of floated around $10. So
yeah.
North of $10, that was the day it was better than 50% chance. Less than $10, maybe it was less than 50% chance. As to the retail security holders, as our recent AGM was described, it was a love-in for them. They were very, very pleased that on the day they expressed their displeasure that the board had gone down that path. The day that the Treasurer formally, killed
knocked it on the head, yeah.
As I've been reported, we were inundated with retail security holders, emails, phone calls, including my mother. Very happy that it wasn't being sold.
So what does this now mean, Mick? That there were other... I mean, you were drumming up interest, presumably to create some tension, or the board was, to create some tension in the takeover before. Are there any other big players around the world that might be, not seen in quite the same light, or indeed here?
Yeah, I'll make the point that, as we said from the first time we got the indicative offer, the company is not for sale. We've never been out there selling it, but that said, in a free enterprise democracy, everything can be bought. So
yes, there's always a price.
That's what's happened. And as our security holders would expect management and the board to do, once that offer came in and before we committed fully to it, yes, a couple of us jumped on a plane and went round and...
But there's nothing happening at the moment, as far as you know.
Look, categorically, Ticky, I have had no recent contact apart from that door knocking, the global door knocking exercise that I did some months ago, a good number of months ago. I've had no direct contact. So when
Josh Frydenberg, as I say, knocked it on the head, the share price went boom, as you'd expect it to do. It's now sort of come back up. You've reaffirmed guidance, haven't you? Yep. So where's the growth story? There was again suggestion that this whole takeover noise had interrupted progress you were making on your own acquisitions, perhaps in the US.
Yeah, well, that's true. These transactions come up, and part of the deal is that you've got to go into a business as usual mode, if you like, and there is certain constraints around what you can spend, significant amounts of money on, and one of those constraints was any activity that we're doing over in the US. So the last, what's it been, 4 or 5, heading towards 6 months, we've had to curtail that activity.
Yeah. Well, just your own headspace, presumably.
Oh, well, that's, I'd be less than honest if I didn't say that, trying to go through a transaction that'll see you out of a job versus keeping the 3,000 troops in the company focused on, forget about me, it's about the company. Yeah, that's what you...
So is that, will you pick up where you took off? You find the US attractive?
Oh, look, Absolutely, and we've said this to the market a number of times. The US is a jurisdiction that they want investment in gas infrastructure, particularly gas pipelines, because they've got shale gas that they need to get to various places, and there's no infrastructure. So they want the infrastructure, and even the regulated infrastructure. They're offering upwards of 300, 400, 500 basis points in excess of what the equivalent regulated return is down here.
Really?
And in Australia we find that, I could take a view that the regulators don't really want any more gas infrastructure at the moment,
yes.
Given the returns that are on offer. So, just on a purely returns basis, the US is very attractive.
Yeah.
And then, from a holistic perspective, it gives an opportunity to diversify our risk.
So you've got this, very big series of assets here in this country. If you made an acquisition in the US, what proportion roughly might it be? What sort of a lick are we talking about compared to your existing? Would it be another 20% of the existing size of your current business? It's one
of those things that, we wouldn't be over there, and we've been over there for the last, 15, 18 months. We wouldn't be over there. We're a $10 billion company,
yeah.
in an equity sense, in fact, more. So, 22, 23 billion EV, so you're not going to go over there and do something for 50 or 100 million. And equally, we're not going over there to transform the company from an Australian company into a US-based company, so we're not going to go over there and, spend 5, 10 billion. So,
somewhere in between.
Yeah, so that's sort of range. It's got to be big enough to move the dial, yeah. and small enough not to risk the home base, if you like.
Yeah. Yeah, you've kept all your team through all this drama with CKI?
The team are all, they're all,
raring to go?
Raring to go,
okay.
Given it's coming into Christmas.
So now what are we thinking about energy policy in this country now?
Well, not much recently, I can tell you that, because not much has really happened.
I don't know. We've got Labor, who's now throwing up an NEG. We've even got Julie Bishop actually supporting the idea.
I grant that, and I was going to say not much has happened in respect of the government. It's the NEG was killed, and
yes.
Yeah, apart from the last day or two, last couple of days, the Labor Party, to their credit. At least they're cobbling together a plan, and that's.
But you'd support that?
Well, we supported the neg.
Yes.
So on the face of it, what the opposition's putting up is a revived neg. Yes. Business and I think a fair chunk of the community supported neg, Mark 1.
Yeah. And Labor, of course, which stands a good chance of getting in, obviously, next year. Labor, of course, has we saw Bill Shorten up there in Queensland several months ago talking about price, gas price cap, actually putting a price on it, not just using the intervention mechanism. Yeah. Worry that might happen?
Well, we'd prefer not to see a price cap, but yeah. When you look at it, the threat of intervention is a different mechanism to achieving the same aim, as in right now the current government could say, well, we'll intervene in the market if the price isn't right. So that's indirect versus the price cap is direct. But
yes.
We don't want to see both or either happen. We'd rather get access to more acreage to
and we passed the time. Matt Canavan's not going to use his big stick for 19.
Well, it seems to be the case. But I just want to go back to the opposition with their energy policy. One of the things that industry, in respect to the neg, was crying out for was just, setting a platform on which we could have some certainty, consistency in investing in the infrastructure required. Yeah. So that's where the opposition, I think, has been pretty savvy here.
All right, and just lastly, growth in Australia, exciting new fields, developments. How are you seeing the lay of the land? Import terminals?
Yeah, look, it's interesting. On the face of it, it would appear as though it's a bit of a dearth of opportunities, but just today with my team, we've got a whole heap of opportunities of all manner of shape and size across the country. So that is the APA story. It's always been around growth, and that's what we'll pursue.
Mick McCormack, I'm very glad you're staying on. Nice to talk. Don't look so happy. Thank you so much for joining me.
Thank you.
Yeah, good on you. All right, after the break, Amanda Lacaze, CEO Lynas Group, on the future of the company's Malaysian processing plant.
You're watching Ticky on Your Money. Now, back to Ticky.
Yes, welcome back. Well, when it comes to handling sovereign risk, miners operating in far-flung places overseas, Africa, Asia, South America, Mongolia, have it in spades. There's all the upside, but when things do get a bit wobbly, it requires leadership and luck to get through, with local leaders often playing to their own grassroots pressures. Well, right now, this is the sort of place in which Lynas Chief Executive Amanda Lacaze finds herself. The rare earth miner is set up with a big mining operation in Western Australia and a big processing plant in Malaysia. And it's that plant and its environmental credentials that are now under scrutiny by the Malaysian government. Now, last time we spoke with Amanda Lacaze from Malaysia, actually, a few weeks ago, she was hopeful that the team charged with reviewing the plant on the Malaysian government side would come in and kick the tyres and continue to approve the operations. In the last couple of weeks, though, Lynas has announced that it would be closing the plant over the month of December. Then, this week, reports have emerged that Amanda Lacaze has had the opportunity for a one-on-one meeting with the Malaysian Prime Minister to plead the Lynas case, presumably, as a responsible operator with a lot to offer Malaysia. So how did that go? Well, I'm joined in the studio by the lady herself, Amanda Lacaze. It's great to have you here.
Hi, Ticky.
So, look, clearly a lot has been happening. Sure. Where are we now? Because you have now put the plant into shutdown over the Christmas period. Was that partly due to this process?
Look, we actually have a situation where we are governed by... our licences are managed by two departments, the AELB and the DOE. And the AELB governs how much lanthanide concentrate we can import into Malaysia, and the DOE how much we can process. Right. And so we do this under, there's an RIA, which is a radiation impact assessment, which is essentially what the AELB cares about, and an EIA, an environment impact assessment, which is what the DOE cares about. Yes. And this year, because we've been increasing production, we wanted an increase in the amount of material that we could process. So the AELB approved, and the DOE... So you got that half done. Yes, and the DOE would normally follow that, but given the timing and given that this review was ongoing, it was just difficult for them to do that at the time. So when you say timing, they were off to do this review of you know, the sustainability of the plant, and at the same time you were saying, we're going so well, guys, we're actually asking you for permission to grow. Yes, indeed. Yeah. And actually, it's still within the EIA conditions. So it would normally be something that we would think of as a business-as-usual approval. We've done this once before, where we sought to increase the amount that we could produce. What's the timing on it now? It's not a really big issue, because this licence goes from the 1st of January to the 31st of December, right? And so it just means that we are now coming very close to that limit, and so we think that it's prudent that we actually stop production, that we don't keep going and then saying, oh, please forgive us. Yeah, the chaps and chappers, they've been out to kick the tyres, they've done all that sort of stuff. So the review committee, as it ended up, is a team of 6 academics, scientists, and really excellent. As it turned out, this review committee was, you know, we're very confident that they will have taken an objective and a scientific view. We had a very busy weekend a couple of weekends ago, so they came to visit the plant on the Saturday. Yes. They were there from 7:30 in the morning, and by the time we finished, not all actually at the plant, because we went off and looked at the port, and we looked at one of our research sites, and they met with some of the village community leaders, and they didn't finish until after 7 o'clock at night. So they worked really hard that day. Yeah. It was terrific to have them there, and it was a great opportunity for our people to show off. And then the following day we had a public forum in Kuantan, and it went for about 5 hours actually in total. Wow. So there were about 800 people in this room, and it was set up very well, actually, and each of 5 different government agencies, MITI, which is the Ministry of International Trade and Industry, the AELB, the DOE, the Department of Health, and DOSH. And overall, from the floor, from the 800, was the mood
good, welcoming, or worried?
I would say that about 600 of them were supportive, that there was quite a lot of public servants and media. And I'd say that there's maybe, I don't know, less than 100 who were really anti. And then there was a group of neutrals. And actually our CFO and my husband sat next to some of those, and they said, well, they used to be associated with one or other of the other groups, but they didn't like their behaviour. They were pleased that this was happening. They were pleased
because you employ a lot of people in the local community.
We do. So I think the thing that we were pleased about is that 5 different government agencies all attested to the fact that we were compliant with regulation.
Right.
And indeed, there was one question about water, because that had been one of the things.
Yes.
And the DOE said the water coming out of the estate is better quality water than the water going into the estate.
That's what we like to hear. That's what we like to hear about business.
Yes.
So, no, that's all good. So, coming to the timing of all this report is ready? Where is
the
this?
report was submitted to the Minister on Tuesday, and we would expect that the MESTEC Ministry will take some time to consider it. And then it will go to Cabinet for discussion. And to your earlier point, clearly we have been seeking to engage productively and effectively with various different.
Now, you were very quiet about your meeting with Dr. Mahathir. Now, so clearly that didn't happen literally this week, did it?
No. And I actually have to say, I did come over a bit fangirl. Oh. He is so impressive.
Yes.
Right.
So I think, I mean, he's been called the sort of Donald Trump of Asia, but as a compliment, as someone who can do deals, can stand up for the country.
He is smart, he is alert. My mother's 86 and she's got the same philosophy, to use it or lose it.
Yeah.
Use your brain, use your body. So I'm sort of, like I said, I was a bit fangirl.
Yeah.
But
and he's going to be around for a while,
I think. Well, the publicly, it's that it's a 2-year tenure. He jokes about 95 is the new retirement age in Malaysia, because of course he's 93 now.
Yeah, so there's that transition to Anwar Ibrahim.
Yes.
Right.
Yes,
okay. So can you tell us anything about the feel that you got from the leader?
I think it's probably not all that helpful whilst we're still in this period where it's being reviewed. What I would say is that exactly what you said, he and others in this government are approaching things with an open mind. They listen and they consider sensibly. And as I said, the review committee, as it ended up, is a well-informed and capable committee to make a proper assessment.
Well, we have fingers crossed for you.
Yes.
And so that plant itself will start anyway back.
Yes, on the 1st of January. So, and for us, I said this to the review committee, and I've said it a lot. I don't want us to be tolerated. I actually want us to be welcome. We are an important foreign direct investor, and we are serious about our responsibilities. Firstly, we have to be safe. At our heart is zero harm for our people, our communities and our environment. But there are other responsibilities come with it, like employ locals. 97% of our workforce are Malaysians. Yeah. Right? We've either created directly, indirectly or contributed to 4,000 jobs in the region. Yeah. That's a lot of people.
And you are operating a business outside of China. And I think that's a really important...
And it's a business that needs technology, and we're developing IP.
But I would have thought the Malaysians would be quite interested in that.
We're developing IP in Malaysia. 80% of our inputs we source locally, so we're contributing to local business. So,
how should investors see you?
I think investors should see that the thesis for investing in Lynas has not changed. We're exposed to a high growth market because we're used in all sorts of interesting technologies, and we have a unique market position because we are the only miner and processor outside of China. And of course, we have this fabulous fabulous asset in Mount Weld, which is our
Western
ore
Australia.
body, which is, you know, this year we were able to upgrade our resource by 70% and our reserve by 60% after further drilling, and that makes it really strong. Any resource company will tell you that if they've got a 25-year plus mine and it's high grade, that this is a good deposit.
And if you absolutely had to, you could actually develop your plant elsewhere.
The value starts under the ground in Mount Weld, yes, without question.
Yeah. Amanda Lacaze, look, it's a really, really interesting conversation we've just had, so thank you so much for sharing with me on it. And, yeah, as I say, all fingers crossed, especially your investors, but it sounds good.
Thank you so much, Ticky.
All right. OK, so after the break, we're heading off to a break just now. All the latest in the Royal Commission.
This is Ticky on Your Money, covering the big business stories.
Welcome back. Now, a couple of very interesting announcements around two controversial companies today. Indian coal miner Adani says it now will go ahead with its $2 billion Carmichael mine and that it will fund the entire project itself. Over in New Zealand today, Huawei is reeling after the government there banned the Chinese telco from its 5G developments, just as the Australian government has done so here. Well, joining me for the latest, including, of course, what went down in the Royal Commission today, our chief reporter, Leo Shanahan. Leo, really interesting, these two developments. So Adani is going ahead by itself. I don't suppose GetUp can get as far as India, can it?
No, and apparently so. It says that it will begin construction within weeks. Look, it says it's going to fund itself, so it'll be interesting to see if this actually happens. We've seen many a false dawn on this project.
Well, we have, and the banks fell away. Do you remember Westpac? Lindsay asked, Lindsay Max did, they were sort of the last one to fall, and no, they all fell away from the financing. But now we actually do have an Indian... all the other boxes had been ticked. It was the financing. So obviously they've just made that...
And it'd be interesting to see that funding structure and the extent at which they released that. But look, Matthew Canavan, the Resources Minister, has just tweeted this afternoon. It's been a tough couple of weeks in CQ with the bushfires. Great news today, though, with Adani announcing they plan to start work before Christmas. Adani has been a little Aussie battler. So many have written it off, but they just keep chugging along. So there you go.
Jobs. So Matt Canavan's happy. So not so happy, Huawei.
No.
Now, this was a big shock, because I spoke last week to John Brumby, who's chairman of Huawei here, and of course Victoria with the Belt and Road MOU, everything's very sort of welcome arms to China generally, but a big shock in New Zealand.
Well, I think this was an interesting announcement because they were maybe this Labor New Zealand government was seen as a bit of a soft touch with China and weren't very cognisant of what's going on in the Pacific, and I think maybe it's them asserting a bit of authority over the Chinese.
Lousy, isn't it?
And it's especially interesting in the context of your discussion this then with Mick McCormack, obviously a company rejected in Australia on the basis of the Chinese connections, Communist Party. And look, it's pretty consistent with other policy, including our own, that Huawei can't get its hands on government infrastructure.
Yeah. So it's interesting that the CKI Hong Kong, that was one step away, not like Huawei. Huawei is Chinese. Do we know what Huawei New Zealand is going to try and do next?
Well, look, they've asking for a meeting with the Prime Minister. So I think it'd be particularly interesting to see whether they get that. They just say, no, this is the decision, or they actually sit down and meet with them and talk about it.
All right, well, two really interesting stories there. So, the Royal Commission, Wayne Byers in the stand. Now, of course, we've all been waiting to see what might emerge with Wayne Byers, but it was fairly cool, wasn't it?
It was fairly cool. It was fairly slow initially. Of course, the APRA chairman, he was initially asked about, he was asked about a range of different things this afternoon by Counsel Assisting Michael Hodge, but particularly in regards to remuneration and what they did in 2016 around CBA's remuneration. Should they have cracked down on what happened there sooner? He basically accepted they should have, but really it's not their primary focus, and it hasn't been their primary focus. He accepted that is changing in APRA and that their focus is really shifting towards that a bit. Well, not their primary focus. Their primary focus, as he says, consistently has to be the strength of banks. But look, it was interesting because they started talking about the two-strike rule and the extent to which this two-strike rule should actually be done away with or not, because of the complications around the two-strike rule and changes to REM structure. Some will think it doesn't go further enough, some think it goes too far, it's not short-term enough, etc. But look, take a look at what Wayne Byers said in relation to the two-strike rule.
Do you have any view as to whether it would be desirable to change the two-strikes rule? I don't have a particular view. I mean, it might help solve this problem, but I think it is important that, equally important, that shareholders have a say and have a voice in these things, and it is a way in which shareholders can express dissatisfaction. So, you know, there are pros and cons, and that's why I think I conclude my paragraph, which is there, with it may be that if we want to get a material change, it will have to be driven by regulation imposing that change so that boards can say to shareholders, I have no choice.
Yeah, look, I find that really interesting because there have been a couple of companies who've tried to restructure their remuneration, and they've found it really difficult at AGMs because, you know, it's a bit like the Republic, really. They want something new, but when they put it out there, it's like, well, no, we don't want that structure, do we? Yeah,
I think it's complicated. I mean, to me, it's not entirely clear what the two-strike rule has to do with review remuneration policy, exactly. But I think on the one hand, you can have investors who are saying, look, no, we don't want to move to some overly progressive hippie system of remuneration. We're quite happy with you guys being judged the way you are. That is on your shareholder returns. Others saying, well, no, this doesn't go far enough, and different shareholder advocacy groups campaigning for different types of things. So you're exactly right. It's, you know, it's very hard for people to settle on a model. And
did they say much else?
Well, look, APRA and ASIC, this kind of overlay between the powers of the two bodies, I thought was kind of interesting as well. He was basically asked, is there too much overlay between APRA and ASIC now, especially in relation to the Bears' powers? And, you know, we've made comments about this in the past, but have a look at what Wayne Byers said on that as well.
And so a concern you express is about the possibility of the responsibilities of the two agencies becoming blurred? Well, I think just to perhaps be precise about that, it's not necessarily my concern, and I don't actually think it's Mr Shipton's concern if he was here. We think we can work together, but there is a lot of external commentary, for want of a better term, that the lines between APRA and ASIC are getting blurred. And so the point really is, as we step in more to looking at factoring in issues of misconduct and ways to mitigate against misconduct into the prudential regime, I'm sure we will get more criticism and more concerns expressed about the blurring, and we will need to work together to see how that can best be done, as I've said, without exacerbating those concerns.
Yeah, now look, really interesting, because this, as you said, we've been talking about before, the government decided that they were going to give the BEAR legislation, which was all about executive accountability, not to the traditional cop on the beat, ASIC, but to the so-called big brother of the banks, as you say, was prudential things. They're looking at capital buffers and that sort of stuff. And they gave it to APRA. Now, this is really confusing for the regulators, and it's got the opportunity for some balls to be dropped somewhere or too much overlap. I would have thought this would be one area where Hayne would be making some quite clear recommendations. Yeah, and it's interesting. I think it'd be one area I think Wayne Byers might be a bit clearer on tomorrow when he tells us more specifically about the BEAR powers. Then I think he was being diplomatic, maybe quite sincere in his statement that, look, it doesn't really matter. But I can't help but think it does matter to the regulators, and murmurs both of us have heard from the regulators about what the BEAR powers are doing. It's messy. That crossover. Yeah, totally messy. Now, what about ANZ? Yeah, look, ANZ concluded in the morning. Shane Elliott had a look. I won't call it a dream run, but it wasn't relatively agile performance. Yeah, and it was a good. It was good performance from him. But you know, as I said yesterday, he has structured himself, positioned himself very much as the good cop on the beat in banking in at least the last 18 months, doing, you know,
call-in radio, you know, and this is the kind of stuff politicians do when they're looking to get a bit of traction with the populace. So look, from a PR perspective, it was definitely a win. But let's keep a couple of things in mind with Shane Elliott, and my colleague Will Glasgow pointed this out quite well today. You know, this is a guy who was head of institutional bank, who were cowboys in the industry, who had senior executives sacked over both business and personal stuff-ups. And they are facing, this is ANZ as well, a criminal cartel case being brought by the ACCC over the placement of over $1 billion worth of shares when he was Chief Financial Officer. So let's not kind of get too rose-coloured glasses.
And they take a long time to correct things that go wrong as well.
Exactly, about the way that Shane Elliott's perhaps acted.
Yeah, all right. Really, really interesting. It'll be a very interesting wrap-up of the week tomorrow, I reckon. 2 weeks at the Royal Commission. Leo Shanahan, thank you very much.
Thanks, Ticky.
Right, Capital Fund Management, based in Paris, is a global investment fund with about $10 billion US under management, specialising in alternatives. It's launching this week in Australia with hopes of taking advantage of anxious investor sentiment and increased market volatility. Well, the president of CFM, Philippe Jordan, was in Sydney today. I caught up with him a little earlier. Philippe Jordan, it's very nice to meet you. You are opening up shop in Australia.
Yes, I am, Ticky.
So what's the opportunity here?
Well, it's an opportunity we've built for 10 years, and we've been coming back and forth steadily for 10 years. I think I've accumulated about 1,500 hours of cabin time. And
coming to and fro to Australia?
Yes.
Sussing it out?
Yes, and it's time for us to make the commitment and have boots on the ground.
Okay, so you've got about, what, 10 billion US under management? Is that right? So describe for me what you see alternative asset investment as. What sort of investments are they you're talking about?
Generally speaking, they're assets that over the long and medium term have a low correlation to stocks and bonds. So they move differently, in a different manner, to stocks and bonds.
So that could include everything from, what, property through to hedge funds?
My moniker of alternative would be everything that is liquid and has those characteristics.
Right.
Right. So hedge funds, some of them are liquid, some of them are not.
Yes.
And within the category of alternative,
yes,
some are liquid and some are not.
So what's the really liquid stuff that you look at?
The global markets, as composed by equities globally, so United States, Asia, Europe, futures contracts on indices, currencies, rates, bonds, options on some of these underlyings, all the things you can trade every day and that you can see settle every day on an exchange or settle at a bank price like foreign exchange.
And do you park investment money there for a while, or are you constantly moving your investments?
Well, they're moving, but alternative beta, let's take long-term trend fund, for example. It moves slowly over the course of 5 to 6 months and tries to adapt to whatever the trend has been, right? It's well established that human beings follow trends, they like trends, and that over the long term, trends realize themselves over a horizon of 6 months or so. However, what I don't do is try and time the trend. It's something you need to own the same way you need to own the equity premia. We know that equities over the long term go up, but the key is the long term. And if you try and time equities, in general, you get bad results. So
that's the basis of our superannuation, our compulsory super system, really, isn't it? This long-term appreciation.
Well, there's a reason for that, is that it's very, very difficult to predict the short term, including the medium term. It's a lot easier to come out with an average result over the long term.
So is this why you think the opportunity is now for our future fund? It's been increasing its allocation of alternative assets. What do you think the thinking there is?
Well, I think the Futures Fund has a very big challenge in front of it. They have serious investment responsibilities, and as thoughtful people, they're trying to run a diversified portfolio that can lead to a robust outcome over the long term. And the only free lunch in our business is true diversification. It's hard to find, but when you do find it, it has true long-term value.
How do you think the equity markets at the moment and the bond markets at the moment are behaving for investors? What would you recommend?
Tricky question, because that's a prediction. And I try and stay away from the prediction business. And so our portfolios aren't organized around what I think the equity markets are up to at a particular moment in time. But this being said, we're keen observers of the marketplace, and we don't operate in a vacuum. The markets are always difficult. We tend to forget that they are. There's periods of complacency, and markets form bubbles. And we tend to think of them in value terms. But markets have a tendency to diverge from value and create bubbles. In other words, the stock market is a great place to invest over the long term, and over the short term, in the last 3 to 4, 5, 6, 7, 8, 9, 10 years, it's been a fantastic place to invest.
But you see both the stock market and the bond market as quite highly valued.
Well, yes, they've both been fantastic.
Yes.
The average return is not the return we've experienced in the last 2, 3, 4, 5, even 10-year window.
Yes.
And markets do have a habit of reverting to value. And it can take a long time, and it can drift away from you much longer than you expect.
So what's the solution then to a potential correction?
Diversification. You can't time the market. If you're overly invested in the market, that's a problem. You need to be correctly invested for the long term. And the long term is different for different people, right? Depending how old you are and what your life ambitions are.
And so for you guys, what sort of returns are you delivering for your clients?
We think of returns as a function of risk. So we think that if you take a 10% risk, and our definition of risk is volatility, so we manage our portfolios at what we call constant risk, which is 10% vol, let's say, for long-term trend following. If you run at that level of risk, your expectation in terms of return over the long term should be of the order of 5 to 6%.
And who are your clients here?
They range. We have a number of wholesale relationships in the marketplace. We have relationships with superannuations. We have relationships with wealth management firms. Australia.
So industry funds and retail funds, both?
Yes. Australia represents about 10% of our asset base, a little bit more. I think it has a lot more potential than that, but it's going to require for us to reach out more and deeper into this marketplace. Which I look forward to doing. I'm going to climb up to 2,000 or 3,000 hours of cabin time. OK,
well, Philippe Jordan, I wish you all the best of it. Come back in a few months and tell us how you're going. Thanks.
Merci, Ticky.
Let's go to Canberra politics now, and I think I'm right, I stand to be corrected, that the government has engineered just about 10 sitting days of Parliament between now and the next election. I think that's right. Well, today the Liberals have fought off a motion from the Labor Party to suspend standing orders in the House of Representatives. It's the first time the Labor Party could have rallied the government to force the government's hand. James O'Doherty joins us from Canberra. James, how did that vote play out?
Well, it was 66 votes for that suspension, Ticky, and 68 votes against. So, look, there are a number of members away from Parliament today. Peter Dutton has injured his arm. He was away. A number of MPs away in central Queensland to attend to that serious fire situation there. But the government did win this vote by 2 votes, 68 votes against the suspension moved by Bill Shorten. Worth noting, Ticky, it was unlikely that this suspension was going to be successful because to successfully suspend standing orders in the House of Representatives, you need an absolute majority, 76 votes, and that would have been difficult to achieve with so many MPs away from the chamber today, with a number of them paired as well. Also, the opposition has some difficulty getting an absolute majority with the number of crossbenchers that have left the government now. But look, it did come to be quite a narrow motion indeed. The newly bolstered crossbench, Ticky, well, they all abstained. That is, the small L Liberals on that crossbench, Julia Banks, Karen Phelps, Rebecca Sharkey and Cathy McGowan, they all sat out from this vote, neither voting with or against the government. But it was a fairly full-throated Bill Shorten that we heard launching into the Liberal Party, basically highlighting their own mistakes in the past couple of weeks, especially following that ousting of Malcolm Turnbull.
They pontificate about this mythical right-wing base and they write off whole communities as irrelevant. Don't worry, they say. Batman isn't the real Australia. Perth is not the real Australia. Fremantle is not the real Australia. Mayo is not the real Australia. Braddon isn't the real Australia. Longman isn't the real Australia. Wentworth isn't the real Australia. And Victoria isn't the real Australia.
Thank you, Mr Speaker. Well, they're very pleased with themselves, aren't they? They're very, very pleased with themselves, Mr Speaker. But what I know has happened under this government is there's more Australians turning up to work under this government than ever happened under their government, Mr Speaker. There's more Australians who have a job today as a result of the policies that we have been putting in place from the day we were elected.
So this was a big test for the government, one the government passed. Scott Morrison will be very pleased about that, Ticky. We know that the Prime Minister is now heading off to Argentina for the G20 meeting. It would be a bit of a relief to get out of Canberra for this meeting, where he'll be no doubt talking about some more prime ministerial things in terms of essentially his home territory, you know, talking about the economy, talking about national security and looking prime ministerial on the world stage. It's often a bit of respite for a leader that's under a bit of trouble at home going to these overseas summits. But he'll be returning to a final week of Parliament here in Canberra next week before the summer break, before the end of the year, where things could get even more testy for the Prime Minister and his government ahead of the next election in May next year.
All right, I just loved that Bill Shorten speech, bringing in Kaiser Soze from the usual suspects, the hand of Malcolm Turnbull. It was great. So anyway, James Atturti, thank you very much. And after the break, Eli Greenblatt, senior business reporter at The Australian, will bring us up to date on the Premier Myer stoush.
Now, back to Ticky.
Yeah, hello again. Here we are, the big Thursday and Friday in retail with the AGM today of Solomon Lew's Premier Investments, and tomorrow the AGM for Myer. The showdown is tomorrow as Solomon Lew attempts to spill the Myer board, perhaps by delivering a second strike against the board's REM report. He's also doing a very nice little divide and conquer strategy, supporting management under the new guy John King at Myer, but calling for the board to go. So what are the chances of a spill, do we think? Well, the Australian's top retail reporter Eli Greenblatt joins me from the fashion city of Melbourne. Eli, Solomon Lew's now the Bart Cummings, is he, of retail?
That's what he was describing himself as. That's right, Ticky. He, in the press conference after the Premier Investments AGM this morning, he used a lot of horse racing metaphors, and he said that while he thinks John King, the new CEO of Myer, is a decent jockey, he needs a trainer. He needs a very good trainer. He needs a Bart Cummings, not shortcomings, was his line. And obviously he sees Gary Hounsell and the complete Myer board as not having what it takes, not having the ticker to train that jockey, to train that racehorse. So he wants them all gone. He's going to go for the second strike tomorrow. But what's interesting, Ticky, is this afternoon we found out that after the Myer AGM tomorrow morning, Gary Hounsell and John King will not be holding a press conference with the media there at the AGM. Now, as you know, Ticky, and as other reporters know, and I've been going to AGMs for 20 years, at AGMs, after the AGM, there is always a doorstop with the chairman, the CEO and the press, always. It goes for 5 or 10 minutes, it's on the corner somewhere or around in a small room. Then the chairman and the CEO go chat with the shareholders. But there is always a press conference. Myer have said today There will be no press conference after the AGM. They will not be talking to the press. And what the Lou camp kind of think is, or believe, is that this could be a sign that Myer know the numbers are in already. They know they'll get the second strike, and they don't want to talk to the press.
Wow. So, I mean, is this, gosh, he's such a strategist, Solomon Lou, this sort of divide and conquer I was talking about between management, because he'd met with John King, hadn't he? And he's number two, at a one-on-one meeting. So do you think this is a way to convince shareholders, possibly even key shareholders, that actually the time has now come?
I think so. I think he's trying to say that it's the board that's the problem, not the CEO. You can have, and he said this morning at the Premier AGM, you can have the best CEO in the country, but without that board asking the questions, posing the challenges, guiding you, it just won't work. You can't rely just on one man or one woman to turn the company around. Not one like Myer, and not the one that's in trouble like Myer is. So that's why he wants to replace the board. But I do think, Ticky, that while there's a very good chance we'll see the second strike delivered tomorrow, and that's with a vote of more than 25% against the REM report, it's pretty unlikely that he'll get the spill motion up. For that, you need 50%. And I think with Anton Tagliaferro and Jeff Wilson likely not supporting a spill motion, I don't think he'll get the spill motion up. So he can't spill the board, but he'll get that second strike. But I think you're right. He's aiming for Gary Hounsell and the board, not for John King. And there seems to be a lot of respect there for John King from Solly Lou.
So what's the ramifications? What happens after he gets that second strike?
Well, I think what happens is, yes, there's the second strike. You then go to the resolution for a spill motion, but I don't think he'll win that. So then we go back to what we've had for the last 18 months, which is this public war being fought almost every day between Premier Investments and Gary Hounsell and Myer, which just goes on. As the results get worse and worse and for Myer, the public war ratchets it up, because I don't know where the end point is. I think until Solly Lou can convince Anton Tagliaferro and Jeff Wilson to support him in getting rid of the board stays there. That's going to be the problem.
Right, well, it's going to be a very big day tomorrow. We'll be talking to you again tomorrow, and I think the chief executive is key, isn't it? Eli Greenblatt, thank you very much for joining us.
Thank you.
Wow, well, that is a big story, isn't it, for tomorrow? That's all for the show tonight. Tomorrow night, Chairman of Get Swift, Michael Frickless, on the sidelines of the company's AGM. Leo Shanahan will be in the seat tomorrow. See you tomorrow, 4:30 on free-to-air Channel 95. And you can also catch us at 10 o'clock tonight on Channel 95 and 601. Thanks very much for your company.